Folks, I don't know if you're aware of this, but gold over the last 20 years has averaged an 11% annualized return. That is better than any stock market index over that period. And now people are starting to say that gold is better than Bitcoin. What is going on out there? We are seeing gold just suck up excess liquidity. We are seeing people dump treasuries around the world and buy the yellow precious metal. Dan, I got to ask, is gold better than Bitcoin? I bet you got a chart or two to talk about.
Oh, I have charts.
Yes, you do.
I don't know. I think you have to qualify that statement and say, put a time frame on it.
Sure. Okay.
Right. But your comment about 11% over 20 years for gold, most of that has been in the last 2 years.
Oh, absolutely. It's definitely cherry picking time frames for sure. Yes.
Right. But and Bitcoin hasn't been around as long as gold has, of course.
Correct. Correct.
But it's an interesting conversation. Gold is better than Bitcoin.
No, because again, just think about it. Again, we can look at the charts, but I think in
Yeah,
the world
all the
today,
gold bugs out there will love you.
oh, well, again, I'm not trying to make. I'm not. Believe me, I'm not a gold bug. But when I step back and I think about today, the environment we are in today, the global environment we are in today, the fact that we crossed a red line by confiscating Russia's treasuries, which sent a signal around the world that America, your money in U.S. treasuries can't be trusted. These other participants have had a choice. Do they buy gold or do they buy Bitcoin? And it is clear as day. They have decided to buy gold, not Bitcoin. So, from a global perspective, I don't think you can argue the fact we now have gold value outnumbering US treasuries value. That hasn't happened in decades.
Right.
So, I don't think there is any question when you look at the global stage that countries are clearly saying gold is better than Bitcoin. I don't think it's an argument, but I'd love to hear what you have to say.
So, do you think they're saying gold is better than the dollar?
Yes, I am. There's no question. I will tell you that gold is better than any US dollar denominated asset. Yes, I do think they are saying that.
Okay. Yeah, I actually don't disagree with that.
Well, then there you go. With the video's over, gold
So
is
we're
better
done.
than
So we're done.
Bitcoin.
um,
That's funny.
so
So
what?
what do
So
you?
what
Go
is
ahead.
the message? Do you think that it's sending? What's the
Well,
message going at?
it's
If
it's
you
really
project this out a couple of years.
it's really interesting because um again, I am not a gold bug or a Bitcoin maxi, which kind of makes it's fun to think about, right? Because I don't have a dog in the fight. I own both of them at a very micro level. And I'm reading more and more articles. Like there was a gentleman, Pierre Lassonde. I'm probably saying that wrong, but he's a legendary gold investor. So I guess you would call him a gold bug. But he has studied gold back to the 70s, like I have for real estate. And he said that, in the 70s, gold went from $35 to $850. That's a 2,300% return over the decade. Why that is important is because Pierre believes that we're actually in 1976, which is the first year of a 4-year gold cycle, in his opinion. So again, that means 3 more years. So again, you and I think it was a week ago, might have been 2 weeks ago, we looked at silver specifically, and we saw that it
Right.
was so above bound, but we both said it could go longer,
Yeah.
and it has. But this guy's like, dude, we might have 3 more years of this. And what I think it is saying is again, we are seeing foreign countries and increasingly businesses and elsewhere get out of US dollar denominated assets. So inflation's a feature, not a bug. And owning assets is how you get rich, how you get wealthy. That's what I think it says.
hmm Um, Interesting. He says 3 or 4 years left. What year would that put us at?
He says it's 1976, the first year
Now,
of a
what
four
year?
year.
What year from now would 3 or 4 years from now put us at?
Oh, yeah. Back to your 2028 call. Yes.
Right.
2028, 2029. Yeah.
Yep,
Oh
exactly.
boy. I'm really getting nervous about 2028, Dan. You're not making me feel good.
You should be.
Nice. Okay. All right.
2029 especially.
Okay.
If for no other reason, it's a nice bookend to the
Yeah, 100
1929
year.
crash.
Yeah, 100-year cycle.
But
So
I think you should be getting nervous,
okay. All right. But let's go back to the
or,
topic at
or at
hand.
least or at least thinking about how to protect yourself.
Yeah. So I know you have charts. This is what you do. I gave you this. Usually, folks, ahead of time, I don't tell Dan what I want to talk about, but I gave him 1 hour notice this time, because again, I wanted to look at charts. So I want to look at gold
Yeah,
versus Bitcoin.
thank you for that. I already have the charts, but I did go in and update them because I hadn't looked at them in a little while. So,
I I appreciate it. Well, let's dig in. Let's look at gold
but they're
and see if it's
interesting.
better than Bitcoin.
By the way, I was at the Money Show this week.
Oh yeah, how'd it go?
It was interesting. In general, most of the speakers were bullish overall.
Buy the dip. Okay.
They all said buy the dip. Yep. They said we probably will have a pullback before we get the big rally.
Okay. So they're all
There
calling
was
for a year-end rally.
a year-end rally. Yep. I mean,
Okay.
next week might be that dip.
Okay.
Except for one. There was one speaker that was pretty bearish.
Oh, okay.
Any guess who that was?
I actually don't know who's there, but I'm gonna guess Peter Schiff because it's the only name I can think.
Yes,
Ah,
he was there.
Peter Schiff, Mr. Doomer himself. Yeah, he's
Peter
been a
Schiff was
doomer for
there.
decades. Man, he should be smiling. I mean, his gold call is looking genius if you don't have context that he's called it for 2 decades.
Well, that's true. Yeah. Yep. Even a broken clock is right twice a day.
Exactly. Exactly. Okay.
All right.
Let's
So this is my website, breakpointtrading.net. If anyone's interested, if the charts I'm going to show you are on here, so you can always, and they update automatically in real time. So you can always go back and look and see what's going on. The newsletter is right here in this little box. And my YouTube channel is in the upper right if anybody's interested in watching that, which I do. I try to do it midday each day. I was at the Money Show this week, so I missed one day, I think, but I try to get it in there. So it's just a quick update of what the market's doing at that particular time, and I answer subscriber questions, and sometimes they want me to look at certain stocks or tickers, and I'll do that, see what the chart looks like, and then any particular interesting topic that I think would be educational, I'll touch on something. I don't know what that will be each day. It's a little bit different. Tuesdays, I try to do technical Tuesdays where I do training on technical analysis. But lately, I've run out of topics because
Ah,
I've been doing this now for, believe it or not, a year.
nice.
The YouTube channel.
Nice.
So technical Tuesday, 52 Tuesdays. I'm kind of running out of topics to cover, but they're all consolidated into a playlist. So if anybody wants to learn about technical analysis, you can just go back and look at those in the
Go.
playlist.
All
Everything's
right.
there. All right, so let's take a look at gold. Go to the charts page. See what gold is doing. First one that's I'll touch on that's just interesting is just the regular gold chart right here.
Jeez, look at that move. Wow.
does
That's over 6 years.
that look parabolic to you?
That looks very, yes, parabolic comes to mind. Yes.
This
Yes,
is
it
a
does.
weekly chart, by the way.
Oh, this is weekly.
Mm-hmm.
Wow. All right.
So that's every week. Just keeps going higher. Came down Friday. We actually had a red day. I don't know if anybody was able to deal with that, any of the gold bugs.
Oh my gosh.
But
Yeah.
what you'll just do a little technical analysis on this. If we do a Darvas box, so remember this goes back to this is 2020. This is a weekly chart. So this goes back a ways. Just do a Darvas box right there,
Yeah.
and you can
Darvas
see
would
where
have
the
been printing money at this in this.
breakout is the beginning of 24.
Mm-hmm.
So almost a 2-year run from that breakout.
And it's doubled. It's gone from roughly 21 to over 42.
Yeah, that's right. Exactly.
That Darvas box for the
Double a
win.
double in 2 years.
Mm,
So that's a lot of where your 11% comes from.
sure, of course.
Just out of curiosity, let me see how far back I can go. I think I can go 25 years. There's 25 years. So we can look at the same support and resistance area
Yep.
on a longer time frame,
Kind of the same thing.
and it's basically overlapping this box. So going all the way back to 2011.
Mm.
So this is a big breakout from
That was a
2011.
long time for Peter Schiff to say gold's going higher.
Yeah, that's right.
Four-
But he
14
was
years.
right. But he was right.
I
And
don't know.
he will tell you that he was
You
right.
could say he was early. I guess you could say.
Could say that. Yeah.
I don't know
Could
if
say
I'd say he's right. He was certainly early.
well, now he's right.
Now he's right. Correct.
All through here, what he wasn't right, but now he is right. So let's take a look at this from a purely a technical standpoint. If you covered up the symbol on the upper left
Mhm.
and you didn't know what this chart was all about,
Yep.
and you were just looking at it to try to see, where do you think it might be going to?
You've got to say higher. I mean, I don't know how you look at that and not think higher.
Well, definitely higher, but can you put a target on it?
No,
So
that's not what I do. I let guys like you do that.
yeah, I know. I'm just doing this for fun, actually.
I know.
I hadn't thought about this before now. So this $260 is where this was in 2001.
Okay.
$260. So the midpoint of the consolidation is 1450. Let's call it 250 to 1450. That's 1250,
Okay.
right?
Yeah.
50, that's 2700. So the target for this leg right there was 2700, which is way down here.
Yeah, we're a
We've
good
blown through
30.
that.
Yeah, we are a good 30% above it.
We've blown through a 25-year target,
Okay.
basically. Now, if you took it from this point, this is about, let's
Call
call
it
it,
1,000. Just call it whatever.
yeah, call it 1100.
Okay, 1,100. All right.
To the middle of this consolidation, it's about
18 to
1800,
18. Okay. So
right?
700.
700. So that's 2500. It's blown through that target.
All right.
So you can't really put a target. I don't know. You don't know where it is.
Well, I think this just screams that something changed. Like sometimes when in investing, the rules change. And
Right.
I really do think that crossing of the red line by confiscating the Russia treasuries is that
Mm-hmm.
red line. And it's kind of, if you could see it on the chart, I think that was in 2022.
Yeah, let's go
And,
back. Let's go back
or
in.
maybe it was 23. Has it been two? Yeah, it's 22. It happened in 22, I think. So that red line has now caused people to dump treasuries and buy gold.
Right. Do you
And
know
by
what the actual
happenstance,
date? Do you know what the
not
actual?
by Bitcoin.
Do you happen to know what the actual date was?
No, but I will Google it and I will tell you in a minute.
Okay. Be interesting to see where that actually happened. This is incredibly parabolic right here. Again, remember this is a weekly chart.
Yeah.
These are green weeks. 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks in a row. It's been higher.
February of 22.
22. So that's right
Or
here.
no, July of 23. What? Yeah, July of 23, 335 billion were frozen.
All right, that's right here. So we had a big drawdown right here.
And then that was the line, just screamed higher from there.
And then right from there, it just continued up, broke all the resistance levels and just kept on going. This is where everybody in the world was buying gold right there.
Yeah, and again, it doesn't take a big allocation shift. I mean, if countries just move 5% from treasuries to gold, you get moves like this.
Right. Now, keep this view in mind. Keep what that looks like right now.
Mhm.
And let's look at Bitcoin. That does not look quite as nice.
No, it's just so yeah. So
little choppier.
Again, yeah, a little choppier. There's another thing to consider with Bitcoin is, and I think we're seeing it right now, um, is just the leverage. The leverage inside Bitcoin is astronomically more extreme than gold.
Yeah,
And what that's causing is a lot of these little fish ladder up 100 to 1. And then, like 2 Fridays ago or Friday ago, Binance comes in and moves coins around and they get all washed out, right? Bitcoin goes from 118 to 101 and they're all gone.
yeah.
And, the leverage in the system people think is healthy. It's actually not healthy. It's the whales are gaming the system. So again, I will say gold is better than Bitcoin.
Okay. Well, so far, I think the evidence would prove you out. Interestingly, Bitcoin's run also started around July of 23.
Yeah. Not as, I mean, what on a percentage basis, what was it? So call it 2750. So it's up 4x.
Um, let's see. I can tell you what the percentage is. Percentage here to July right here, 40,
No, it's more than that.
40%,
No,
about 40%.
no, you're doing that wrong. You got to go the other way.
Oops, I'm doing, oh yeah, you're right.
You got to go from the bottom up.
Go this way.
There you go. Yeah, 400.
400%.
Yeah. Yeah. It's 4x. I mean, it's in fairness, that's bigger. I think that's bigger than the gold move.
Well,
It's,
let's
it's,
find out.
so maybe Bitcoin is better than gold.
Well, again, you have to think about the time frame. So
Well, no, that's what I'm trying to do as best we can, apples to apples, right? So we
I
go
got you.
back to,
Okay, let me see. Let's see what this one is. July of 23. Let's just do it from the low right here, which is actually October.
okay. No, it's going to be more than 4x.
I'll
It'll
do
be
it.
four.
I'll do it from July right
Yeah,
here.
do it from July. Let's try to make it best apples to apples.
It's only 130% for gold.
19. Okay. All right. Well, there you go, folks. Bitcoin is better than gold.
From this perspective, from that perspective, it's better than gold.
Yeah, it's up twice as much, right?
It's
I think
not it,
Anthony Papiano says Bitcoin is the hurdle rate. That way everything has to be compared to it. So as far as Anthony's concerned, he's been on the channel. Someone I've spoken to a couple of times. He's Pomp, he goes by. He's like, hey, if you can't beat Bitcoin's hurdle rate, you just got to put it all in Bitcoin. That's his opinion. So
all right. So that's an interesting idea. So that brings me to my next view. Let's look at Bitcoin correlation with the NASDAQ. This is important, especially when we're comparing these two.
okay.
As you can see right now, it is 83% correlated.
AKA correlated.
Yeah, that's right. Anything above 50 right
Yeah,
here is correlated.
highly correlated. Yeah, that's
Anything below negative 50 is not correlated.
that'll be
And
interesting.
you can
Let's
see
see what.
Bitcoin has become more and more correlated.
Yeah, so it's another tech stock. That's all it is.
Yeah, it's a proxy for the NASDAQ 100.
Well, let me ask you this question: if that's true, which again this data says it is, and then suddenly a recession comes and the AI debacle blows up, if it stays correlated, that means Bitcoin's in trouble.
That's right.
Okay,
That
got
is
it.
exactly correct.
Okay.
And it's been moving up and down with the Nasdaq, especially recently. Um, one one thing to take away from this is I like to look at Bitcoin over the weekend because it trades 24/7,
Amen. Me too.
especially on Sunday, because it gives me a sense of what the market's going to do
I
the
couldn't
next
agree
day
more. Bitcoin is the indicator for Monday open. Absolutely.
because it is so highly correlated. So always remember this: Bitcoin is highly correlated with the Nasdaq 100.
It'll be interesting to
So
see
let's look.
what gold and S&P or Nasdaq do.
Yeah, we let's look at Bitcoin and gold.
Oh,
This is using
can we do gold in the Qs first? I know it
um
doesn't look like you have that
yeah,
chart, but
I
I bet
do
you
have
can.
it down here. I have gold and the S&P.
But that won't be apples to apples, right?
Not quite, but
Okay, close enough.
it's actually let me go back. I'll go back to this one. I can change this.
Okay, let's see.
It's gonna be Correlations with the Qs. Yeah, let's do gold. Might knock a few things off, but
Yeah, we'll just, if it doesn't work, it doesn't work.
so you don't have the colored bars in here, but
It still looks
essentially,
correlated. Yeah.
yeah, but it looks like it. That's why I want to do this. So correlated is above 50, which is right there.
Yeah. So it's highly correlated also. It's interesting.
It's highly correlated now, but it is not always correlated. Not
That's
like
true. It's not I would argue it's not normally correlated.
that's right. Exactly.
Okay.
That's the important thing. That's why drawing these boxes in here is important.
All right. That's cool. I like that.
That's not nearly what how correlated Bitcoin is to the
No,
Q.
Bitcoin was highly, yeah. Okay. So that's apples to apples. Thank you for doing that. Now you can show your other chart. Sorry to take you off script.
That's all right. This is gold versus the S&P. So anytime it's moving up, gold is outperforming.
Mhm.
Anytime it's moving down, S&P outperforms. So S&P was outperforming until basically last month. September gold began to outperform. Now this is a daily chart.
Okay.
Now down here you can see, and the zero line is right here.
Hmm.
So this is these are price performance, which means all of these colored ones start at the same place.
Right. Okay.
All right. So the dollar versus the S&P, gold versus the S&P, and bonds versus the S&P. You can clearly see gold
Is the winner. Yeah.
right here. Again in September, went parabolic. It was outperforming back here, then it pulled back, gave everyone a chance to get in if you wanted to get in,
Yep.
and then took off again.
Okay.
It's interestingly, it's getting right back to a resistance level.
Hmm.
All right, so that's the S&P and gold. We can look at silver.
Oh.
Well, let's look
Okay.
at gold versus silver. And interestingly, on an absolute basis, they are the
Wow.
same.
Hmm.
But on a relative performance, meaning they all start at the same place 1 year ago or year
Silver
to
is
date,
better. Yeah.
silver is actually outperforming gold.
Interesting. I would not have guessed that actually. But yeah, good to know.
So silver is better than gold.
Ah,
Bitcoin,
so
Bitcoin's
gold is better
better.
than Bitcoin, but now silver is better than gold. I love this.
Yeah,
This is fun. We should do these more
that's right.
often.
Right now it is.
Yeah, yeah.
And the US dollar, you can see, has just been,
Yes.
languishing.
Well, it's having its worst year since 1971, so
Right.
not a good year
Yeah.
for the dollar.
Yeah. That was a topic at the Money Show from a
I
number
bet.
of people. In fact, they had a panel up there, and one guy said, "Yeah, the dollar is getting killed. The dollar is collapsing." And the lady said, the dollar is not collapsing. Come on. Yeah, sure, it's been going down, but it's exactly where it was 2 quarters ago.
Hmm.
And I pulled her aside afterwards and I said, "You are absolutely right about the dollar. The dollar actually is exactly where it was 35 years ago.
Really? Is
It
the
is
dollar
right
where it
in the
is 35 years ago?
it's exactly in the middle of its range."
Oh, the rand. Okay, I know what chart you're talking about. Yeah, yeah,
Right? I've shown that before.
yeah. I remember now.
So the dollar is not collapsing, even though it makes
It is weakening, but it's not.
it is weakening, yes, but
It's just your scale.
weakening is actually a good thing.
Yep.
So we'll talk about that in a minute.
Yeah. Yeah. Well, you want to do any
Um,
more comparisons? Because we also
I
got to
do.
talk about CPI.
Oh, I do. There are more. Okay, let me go back here and look at Bitcoin. There's all kinds of Bitcoin charts in here for those Bitcoin folks.
Nice.
Let's look at Bitcoin correlation with a number of things. So again, up here is a relative chart. This means that, and this goes back 2 years. So this is comparing Bitcoin, gold, and the NASDAQ, all starting at the same point 2 years ago.
So in this case, Bitcoin is better than gold.
In this case, Bitcoin is better than gold. In the previous case, Bitcoin was better than gold as well.
Okay.
But right here, you can see gold is starting to accelerate, where
Mhm.
Bitcoin is actually rolling over.
Yep. Okay.
So down here this is strategy,
Yep.
MicroStrategy.
I would call that highly correlated for a long time.
I'd say it was highly correlated. It lately has been uncorrelated, which is really interesting. That this it's going to be interesting to watch this company and see what they do. Because if the market, remember, Bitcoin is highly correlated with the NASDAQ 100. If the market falls apart,
Yeah, that's true.
Bitcoin's going to fall apart,
Yep.
and MicroStrategy's whole business model may fall apart.
Will implode. Yeah. Like
Which which means
I don't know if anybody has this number, but there's some number where Bitcoin falls to that just ends strategy. I would think.
yeah, I don't know what that number is either. I think I've seen it before, but at some point, Strategy is going to have to sell its Bitcoin or some portion of its Bitcoin to
Or
just,
start selling a lot more software. One or the other.
well, that's not going to happen.
Yeah, you and I know.
That's probably that's probably that's probably the most unlikely scenario.
Yeah.
You and I used to sell against MicroStrategy.
Yeah, yeah. Well, actually,
So,
MicroStrategy bought our old company, HPE or HP, whatever. Yeah,
mhm.
MicroStrategy bought them. Yeah, bought
Yeah,
the stuff we
that's
used
right.
to sell.
Right. So that's MicroStrategy. This is Bitcoin correlated with the Nasdaq, and this is a just a 2 year view. So it is becoming uncorrelated
Hmm.
just recently, and Bitcoin correlated with gold is really not correlated
Yeah, not really.
at all.
Yeah. Okay, I like that.
So the other way to look at this, and this is for anyone that wants to trade either one, Bitcoin or
Ooh, I
gold.
like this one. Uh-oh, this
I
ought to be
have
fun.
these are using ETFs, IBIT and IAUM. So these are
Okay.
gold and Bitcoin ETFs. All right, here's the correlation at the bottom. Sometimes they are correlated, sometimes they are uncorrelated.
Hmm.
And
Interesting.
when they are uncorrelated, then that's the best time to move into one or the other.
Oh, that
In other
makes sense.
words, they will move in opposite directions.
Right. That makes sense.
All right, so right here it's uncorrelated in the red, and the moving averages have crossed over. The gold one, just think of that as the gold. That's
Hmm.
gold. And the green one, think of it as Bitcoin.
Got it.
All right. So when gold goes below Bitcoin, that's the time to sell your gold. Here's the actual gold chart up here.
Yep. Hmm.
It's the time to sell your gold and
And buy
buy
Bitcoin.
Bitcoin.
Got it.
So you'd buy Bitcoin right here. You'd sell gold right here based on this. Bitcoin went up, gold went sideways. As they both went sideways and through here, you can see they became correlated.
Got it.
All right. And then right here, gold began to take off. This is the end. This is August of this year.
Hmm.
And that's where this began to cross. These began to cross right here, and it became uncorrelated, which means they are about to move in opposite directions of each other. And that's what happened. Bitcoin basically just went sideways. Gold just started to go directly higher.
Hmm.
Now, and then they became correlated briefly when they both went higher, right here. But right now they're very uncorrelated. Gold
Like it.
continues to go higher, and Bitcoin is falling off a cliff.
Yeah. Well, it's really
All
going to
right,
be
so,
fun to watch this
so just
unravel.
this little chart right here, if you want to trade one or the other, it'll tell you when to get out of one and get into the other one, or to be in both sometimes.
Nice.
Um, there, I think there was another one I wanted to show down here. This one right here. This is all of them.
Ooh,
So
look at that.
there's silver. These are again all relative. So it's price performance
Yep.
from 1 year ago. This is over 1 year. So silver is outperforming gold. This is where it crossed over right here in September.
Okay.
S&P is lagging. 10 year continues to go down. US dollar is just kind of going sideways.
Gotcha. Very cool.
All right. So I think our conclusion is Bitcoin is better than gold and silver is better than gold
I like it. So gold
for,
is not better than Bitcoin
for now.
for now in the current context. That's fine.
Right.
Well, again, I think it's going to be interesting because, I think we started this session with a clear sign that foreign investors, again, I think it's not as clear, but when you look at a return, Bitcoin has had a better 2-year run than gold, clearly. 400% versus whatever it was, 180.
Right.
So on a percentage basis, absolutely. But I would ask you to, step back and ask why foreign entities in countries are deciding that the precious metal is better than Bitcoin, because I think they're clearly saying it is.
Yeah, that's very interesting. But at the same time, they're still buying treasuries.
Well, that no, but exactly, they're buying less treasuries, but still buying. They're buying more gold, and they're not buying Bitcoin.
Right.
That's what's happening now. Again, foreign countries, maybe there's rules. You can't buy crypto because it's unregulated or it's too young. I mean, again,
Right.
gold's got, I don't know, 2,000-year history.
Yeah.
Bitcoin's got, I don't know, 15 years or whatever it is. So,
Right.
the scale is different. So, but again, I think there's a lot going on. Um, what changes this game for Bitcoin is if a foreign government or even the United States actually actively buys Bitcoin. I know the US has a Bitcoin reserve, but it's only for confiscated Bitcoin. They're not actually buying any. But I think sometime in the future, some country, right, some big G5 country is going to start buying, and that could be game changing. But right now, gold is better than Bitcoin for the big countries.
Yeah, I'll be interested to see how stable coins affects all of this.
Well, I think what's going to again. I don't know if we talked about this, but I think stable coins is what's going to save the U.S. Treasury. It's going to send
Yes,
treasuries lower.
that's right.
Yeah. So
Exactly.
yeah. So instead of getting sidetracked on that, we got to talk inflation. We're actually going to get a CPI reading this week, which is like 2 weeks late.
I know. Just as an
So
aside, because I always want to watch this, the 30-year Japanese
that's
bond
a pretty violent
still
move.
still staying up there,
But I mean, look at the
3.1.
scale. It's like 2020, it was 0.5. Now it's over 3. That's
Yeah, well,
600%.
that's right. But right in here, 23, 20, I think it was beginning of 24, right here,
Yeah.
is when the Bank of Japan announced that they will no longer do yield curve
Yeah,
control.
curve control. It's interesting because I don't know if you saw it, but they just had a new prime minister elected,
Hmm.
and
Right,
she, I forgive me, I don't remember her name. She's going to be the money printer turned back on based on her
right,
stance. So
right.
yield
Yeah,
curve
and
control
this,
might come back.
yeah, well, maybe we'll
Yeah,
see.
we'll see.
But that's the reason for that. I asked a few people at the Money Show this question. Most of them most of them didn't know how to answer it.
Yeah, most of them didn't even know what you're talking about.
Well, they kind of knew what I was talking about, but it was clear that they hadn't really thought about it.
Got it. All right.
So they're not really nobody's really thinking about this. And the spread right here, this is the key, the spread between the US 10-year and the Japanese 10-year.
Yeah, because
It's
that's the
still
yen
sitting
carry
right
trade.
around 2.5. It's 2.38 right now.
Yeah, if it goes below, what is that
If
bottom line?
one and a half down
Yeah,
here.
it goes below 1.5. This yen carry trade could get violent.
Right. That's right. That could change everything. All right. CPI.
Yeah, so the numbers on CPI, folks, headline last month was 3.1, core was 3, or sorry, last month was 2.9, core
Right.
was 3.1. Expectations, drum roll, 3.1 for headline. Inflation's going the wrong way. I believe headline bottomed at 2.3. It's now up almost a full point. What the heck is going on?
Yep. Here's the base effect. I, when I looked at all of this, I don't see how we're going to get to 3.1, frankly.
Yeah, I didn't. I thought 3.1 was high too, because not only we have a positive base effect, right? The gap is bigger than previous months, but also oil is down.
Yeah, I'll show you that in a second. But yeah, the base effect right here, the gap, that's the gap that drops off right there. That's not really a very big one. So,
Yeah, I don't know.
but which could push it up. I can see it going up to 3 maybe
That's where I was at. I was at
based
3.
on based on that small gap right there. Once we get over here with these big gaps, it's going to start dropping. Should start dropping
Correct.
significantly.
Should. Yeah.
So we still got what one? We got 2 months to go. So this is December, end of year,
Right.
December, January, February. Inflation should look like it's starting to fall
Rolling
off a
over.
cliff, but this one is actually a little bit bigger than the
Hmm.
previous month.
Yep.
So I don't see how we get to, last month the forecast was 2.9. We came in at 2.9. The month before that, it was 2.7. We went to 2.9. So that was 0.2 right there.
Yeah.
But we had really small ones back here when that happened.
Mm-hmm.
We had a negative one back here.
Yeah. Deflation. Yeah.
So I can't really see getting to 3.1. So if we look
All
at
right. So we got,
commodities,
so both, it's funny, you and I rarely agree on this, but both you and I have under on 3.1. We would take the under.
yeah, I'm definitely on the under side.
Yeah. Okay.
So these are commodities, and this is what you're talking about. Oil and gas down here is just falling off a cliff.
Yeah. Now the problem is maybe that fell too late in the month and we'll see it next month. But I mean, you
Yeah,
know,
but it didn't. But it didn't increase.
correct. Didn't increase.
So
And
it
we're
went
talking headline,
sideways.
not core. Yeah.
It went sideways and then dropped off the last week.
Yeah.
But look at food
Yeah.
dropped for almost the whole month. Copper is the only one that went up.
Yeah.
CRB, which are these over here, agriculture, energy, and metals, that just
Yeah.
went sideways. And
Yeah. I don't know.
DB,
3.1 seems kind of aggressive to me.
yeah, I
I don't
agree.
think, I don't think we get there.
I could see 3 maybe, but
Correct.
3.1. So let's say we get 3.1, and then the very next week we have the Fed meeting,
Yeah.
and right after that we have the jobs number.
Yeah.
Actually, we may have a jobs number even before the Fed meeting if the shutdown ends.
Oh, that's right.
Let's say,
You were calling shutdown ends tomorrow, right? Do I remember that?
well, yeah, I said it would. I said the
Monday,
20th,
Tuesday. Yeah.
right? Yeah,
Okay.
the week of
All right.
the week of the 20th. It might
Yeah.
be on the 20th, but
Yeah.
they
And
might
I'm in the
they
camp
might
that it's going longer than 35 days. I
they
am
might
too.
drag it out a little bit longer now that the Hate America rallies have ended.
Yeah.
So
Okay.
we'll see.
Yeah.
We'll
All
see
right.
what happens. But
Okay.
it'll be interesting. I mean,
So
we'll
let- so
see.
let's so
We'll
let's
see
play
who
Fed.
wins that over under for the 20th.
Yeah. Yeah. So let's play this out. So let's say inflation comes in hotter than we expect, but at 3.1. So we go 2.7, 2.9, 3.1.
Right.
Inflation's clearly going the wrong direction. Let's say we don't have official jobs numbers, but we got all these unofficial ones saying the job market is weakening.
Right.
You're the guest. You go first. What do you think the Fed does?
I think they're going to go 25 basis points no matter what happens.
Yeah, I agree. I think they're going a quarter no matter what. Yeah, I
Right.
agree. And we agree
And
this time. We don't usually
and then
agree.
I think they'll do a quarter in December as well.
That's interesting because I actually think they're going to do a half in December. I'm back to a
Yeah,
half.
I don't think they will.
Yeah, we'll see.
And especially if we get a 3.1 number.
Mm-hmm.
I thought this was a funny cartoon. This is my website, by the way. I mean, my newsletter,
Newsletter.
which I just sent out because I didn't get it out yesterday. This is pretty funny. Warren Buffett, 1956, 100,000. 2025, 147 billion.
Nice.
Me, 9:30 a.m., 100,000. 10:30 a.m., $1.
You'd be a leveraged crypto investor.
Exactly.
That happened. I mean, I don't know if these are true.
Oh,
Even
I
though
know it. I know it happens. Happens all the time.
yeah, it's crazy.
Um, but what were we talking about? So here's 3.1. That's what they're shooting for.
Yep.
Now, here's another interesting discussion. If the shutdown doesn't end,
Mm-hmm.
then we might not get a CPI number.
No, the CPI number's coming out. They sent people back. This number's coming out.
Okay.
CPI will come out.
All right.
We're not guaranteed to get a jobs number.
Right. Okay. So here's the Fed watch. So clearly, definitely a quarter
A
point.
cut. Definitely cut.
Quarter point cut, 99%, 94% for a December
Look
cut.
at that. Look at that odds of a 50 up to 6%.
Yeah, right.
You're laughing. Hey
Well,
man, it's not zero.
I'm, I'm laughing because I don't know, it just made me think of the Dumb and Dumber movie.
Great.
So you're saying there's a chance?
You're saying there's a chance. That's right. That's hilarious. That's good. That's good, man. So yeah, I think it's going to be an important week. Again, getting CPI out before the Fed meeting is important. Getting the jobs number out would be awesome. That said, I think they have enough private data to get a handle on the job markets. We both think a quarter's coming almost no matter what.
Yeah.
I do think December is in play, but October is baked in. The cake's already cooling. It's ready to be frosted.
Yeah. I mean, if we do get that hot inflation number, then it's going to be tough for the Fed to go 50.
No, I agree. That's why my base case is it comes in at three, or I mean, there's a chance in my world that it comes in at 2.9, not three
Right.
one. So
Yeah.
I think 2.9 is more possible than 3.1.
I do not disagree with that. I actually put these charts we just looked at. I put them in the newsletter for anybody that's interested. Oh, here's the other interesting thing, and I talked to Dave Keller, who is a contributor on stock charts that I've talked to quite a bit before, and he was talking about the Hindenburg omen. This is in the newsletter too, and I actually have a chart on my website. The Hindenburg omen, which sounds pretty dire, doesn't it? Hindenburg
Yeah. So
omen.
far, I'm thinking this is bad, but when I look at the chart, I'm not seeing bad.
Well, Hindenburg omen theoretically is bad,
Right.
and there are three things that make it up. The market's been going up, which means it's above the 50-day moving average, which it is.
Check.
Number two, McClellan oscillator, which is essentially a moving average of the advanced decline line.
Okay.
So the advancers versus decliners is below zero. It's negative, which
Oh, it
means there
is.
are
Oh,
more decliners than there are advancers, even as the market's going up.
okay. That makes sense. Okay. So that's two. Check.
And then the third one, which is the hardest thing to do, and each of these levels here is basically number one, two, and three. So number one, it's easy to be over the 50-day moving average.
Right.
It's a little bit harder to get that negative McClellan oscillator. The third one is really hard. That's when you have new highs and new lows that are more than 2.5%. So you have new highs and you have new lows at the same time.
That's interesting. That would be hard to do. Okay, got it. So
Right.
that's
So
happening.
that one's hard to do, and we've actually done it 2 weeks in a row right now.
Uh-oh.
So this is a weekly chart right here.
The Hindenburg omen, folks. Watch out.
Hindenburg omen. Now, one thing I pointed out to Dave Keller, I said, you realize that this indicator only has about a 25% accuracy.
Hey, that's better than the doomers.
He goes,
11,
what?
12.
Where did you see that? I said, just do chat GPT it if you want to.
Yeah, that's funny.
So, 1 out of 4, but this could be the one. Now, one thing that I did notice is very rarely do we get 2 weeks in a row.
Yeah, I don't even see 2 weeks in a row.
Right. I mean, I went back like 20 years and I never found 2 weeks in a row.
Okay. All right. Well,
so in order to do that, that means this down here, new highs and new lows, more than 2.5%. That has to be true for 2 weeks in a row.
Interesting.
So you got new lows, meaning people are selling to get out, and you got new highs, meaning everybody's bullish. You got bullish and bearish at the same time.
Oh, this is going to be a lot of fun, folks. Let us know in the comments below. What do you think's coming our way? We'd love to hear from you. Lastly, what's better for you? Is gold better for you or Bitcoin? Let us know in the comments. Which do you prefer? You have to pick one. Let us know in the comments. Dan, closing thoughts?
There's an article in here on buying the dip that'll talk about what we just talked about. That next week might be a pullback, which I think will be Wall Street accumulating.
Okay.
And then at the end of the year, I think we're going to get a rally. But I'll leave you with the very last one on this newsletter. First one is statistics. It's actually a chart that somebody showed in the Money Show. Domestic migration.
So California, New York, Illinois, New Jersey, Massachusetts. What do those 5 states have in common? Then we have South Carolina, Arizona, North Carolina, Texas, Florida.
Right.
All right.
So everybody's moving out of these and moving to these. And then I saw this little meme that I thought was pretty funny. U-Haul trucks
ran out of trucks leaving California. Ouch. Well, I was one of them. I left California 2 years ago. I had enough of Gavin Newsom.
Yep. I don't blame you.
Yeah, there you go. Well, Dan, you are amazing. Thank you for coming on each week. Thank you for your weekly show. We appreciate you. Take care.
You bet. Yep. If you want, the newsletter has a lot of this data in there. Just go to the website, click the little button, you can get the newsletter.
Thank you, buddy.